Hello everyone, it is yet another day here at Value Galactica. We thank you for finding time to watch us. Today we are dwelling on the topic demystifying trading. There has been much talk around trading and it leaves a bad taste on people who are looking to enter the industry, people who are trying to get a good hold of maybe their edge in the industry. So you find that having misconstrued ideas, statements, and opinions makes it difficult to navigate the difficult environment that trading is. But actually, when one is able to understand what trading is, they are able to navigate it well and find success over the medium term and the long term. Sometimes people are lucky to find success in the short term, but again, as it is said, trading is never a get-rich-quick scheme. It's a risk and reward game, and you should be able to understand what you're risking and what you're looking for in terms of reward. So that's a topic for another day. So for demystifying trading, so we start with is trading gambling. So you find that people are comparing trading to gambling, which is quite not the case. Trading and gambling are two different things. So you find gambling is just placing a bet, expecting a particular outcome, and it's just a thing guided by possibilities and probabilities. But trading, there's so much around it. In trading, you find there's news around whatever financial instrument one is trading. There is technicals. These are market structures, the way the market is structured. The market moves in certain cycles. You'll find that the market can hardly rally, that is, it can hardly go up to a certain extent within a limited duration. So there are certain markups and limits in tradings. When one is able to combine them, he or she is able to clearly discern what they are doing in the markets, and by the end of the day come up with a working strategy that is quite clear and of essence towards their success. So back to the question, is trading gambling? So trading is not gambling. In trading, you have to identify your strengths, you have to identify your weaknesses. So your weaknesses can be your emotional intelligence, your psychological strength, and even your biases when doing technical analysis in the market. So you find you have to sift out through the noise and get a clear edge from these weaknesses and your strengths. You can find that you're good at trading a certain pair, you understand how it moves, you understand how the news surrounding it affects that pair, and you find you have been winning or making moves around it, and you're just compounding in the positive. So it is good to understand your strengths and weaknesses in trading. So at no point is trading comparable to gambling. You can only compare trading to gambling when you're just trading, like let's say when you're guessing what you're doing in the market. You just enter the market, you hit the buy button, you hit the sell button because maybe you have sold, you see the market going against you, you cut your losses, you buy again. You're just doing things for the sake of it. That's quite wrong and very wrong, because before you know it, you'll have blown your accounts, blown your investment, and it's quite a painful experience. Why would you want to expose your quality time, your invested time in just doing a shady or shoddy thing around trading, because you're ideally wasting your resources, which is quite not a smart move. So trading is actually not gambling when done in the right manner, in a professional way, in the right structure. Actually, it's something that is quite I can say quite of a great elevation to your financial status, because you are able to even compound your invested capital in greater percentages compared to what you get in the market. It's risky, that's for sure, but you have to understand this risk to reward aspect is what defines trading. At the end of the day, you have to understand the risk that you're putting in, you have to understand the reward that you're putting in. And in trading, not all days are winning days. Some days can be zero gain and zero losses, and days you can have some bit of a loss. That is, if you have a working system, you can have a bit of a loss, but because of the risk and reward aspect, so you'll find your rewards outdoing or outperforming the losses. So at the end of the day, you find that you have compounded in the positive, and you have gotten quite great gains. So this is something that I really wanted to look into. So trading is actually not gambling. So the other question is, can one sustain themselves via trading? Yes, one can sustain themselves via trading, but the only mistake one should not do is quit their usual source of income to go and just start trading. Trading is a journey. It's not like a one day or 1 week thing and you're just able to understand, especially if you are a novice coming into the industry. You need time, you need to absorb all that trading comes with, so that you're able to find that ease of applying this knowledge. Because when you're new, you'll find that you'll need a lot of theory, knowledge, just reading through, understanding market structures, things like candlesticks. Just what is it that the market has in terms of just visuals that you're able to see and maybe make certain conclusions. So you'll find that you'll have to grow over it and then attach these visuals to things like how the market is flowing and how the market is receiving some news releases or anticipating some news releases. So over time you'll be able to see all this and connect all of them, and at some point when all this sync, you find that you have gained an edge and you are headed towards the right direction. So actually, yes, one can sustain themselves via trading, but it's recommendable that whatever source of income that you have while you're starting your trading journey, maintain it until a point that trading can sustainably outdo the source of income that you're getting from your job or business. Because you don't want to get into trading, and because especially in the first years when you're trying to understand or just to put to get your feet wet, rather, you'll find that trading gets you into some form of a roller coaster. So you'll find that you'll be up with gains, up with losses. Sometimes you're neutral, not making anything, and that becomes a pain point. And since you had left your job or shut your business to focus on trading, you get yourself into frustration. So don't risk doing that. Yes, it can sustain your life, your living, but at some point in it, not when you're starting. So try to establish that balance and understand how it works. So now there's another question: has trading worked for anyone? Yes, trading has worked for anyone. Trading has worked for some people, and we have legendary traders who even have grown big corporate establishments, like Ridalio, who runs Bridgewater Associates. He started it in his bedroom. Slowly got employees. Over time got investors to invest with him, and even at some point he had to close for investors, like he was not taking any more investors into his trading firm, and he has built great systems that are raking in billions for the company. So trading has worked for people, but you really have to find your niche, or rather you really have to find your edge in it. It's not something that you can maybe rely on a particular system for a long period of time, because remember, the markets are also changing. The market are not static, they are flowing in strange direction, and you'll find the cycles are different. So because maybe in a range of 5 to 10 years the market is flowing in a particular way, it could be ranging like just consolidating around a yearly zone. Sometimes you will find within the 5 to 10 year range the market is in an upward trajectory. It could be with the rally and the bearish, that is bearish is going down when the market is going down. So you'll find it will be having some moments when it's going up, still going down. But when you look at the 5 to 10 year range, the going up and the going down, when looked well in an average, you'll find the market overall has been going up. So the moments that it has been going down, those moments don't supersede the moments that it has been going up. So the market has consistently been rising, but gradually. So you'll find over time, because of these changes in patterns and cycles, the market will always shift the dynamics even around a system. So you find a system can work for even 5 years, sometimes even 10 years, and after that it stops working. So you have to build foolproof systems that are able to see you through such occurrences and happenings. One other thing is the reason why people ask if trading has worked for anyone is because you find that almost someone that you know that trades, almost everyone that you know that trades has failed in trading. So, and that's why you even find in researches and even from most brokers, they say more than 90% of the traders fail. At the end of it, they lose all the money after they have deposited with them. Why is this so? Because people get into trading with this belief that when they just buy or just sell, they'll be able to make a quick back end, continue growing profits over time. But it's not that. It has to have a system around it, which is quite a necessary tool and a necessary recipe for trading. So this is why we go into the next step of how do you start the right way in trading. So starting the right way in trading, you have to identify a reputable person or institution or firm that is actually legit in their trading, because you'll find just a lot of people out there saying they're good in trading or they're giving trading lessons, and actually they're just fumbling around, and you don't want to find yourself in that, because at the end of the day you'll be losing your money and your money that you've actually worked for, or money rather that you could have used in some other lucrative or maybe something of essence, like just spending time with your family or loved ones. So yeah, so how do you start the right way? Identify a reputable firm or company, try to go through their content, see what they're offering, and if they have a community, talk to members in that community, just get a grasp of what is happening there. And if you get a grasp that it's a good community, if it's a good platform, go into their content and just try to understand the nitty-gritties here and there, and try to build on the knowledge that you have and research more and more, and most importantly, make sure you practice what you research, especially in demo environments. Demo environments or demo accounts are rather test accounts that you are able to simulate or just practice what you're learning from the markets and from the resources that you're getting. and also try to get a buddy in that platform that you can walk the journey with. Also, another important thing that can help you demystify trading while you're trying to get your feet wet in this industry is when you're trading, especially when you're new or just in intermediate level. That's like a mid-level status in your trading journey. You'll be finding yourself like you want to compare yourself against the gurus who have been in the market. Someone who enters a position and maybe he makes like 50k USD in one day, even 100k USD in one day. And sometimes you look at the cumulative gain they've made over a month, and you find that they've made like 200k USD or 300k USD. And you're there trying to scratch your head, and you're just wondering, how do I do this? And because you're trying to compare yourself and try to achieve that, you find yourself with your account that you're trying to start off, you're trying to over risk, just trying to see whether you can actually have similar gains to that other person, which is quite a wrong perspective. Be content with where you are, but don't be comfortable. Just understand it's a process. Don't compare yourself. Just learn from those who are making it, and you'll be good over time. Just trust in the process, trust in the process, one step at a time. Build on whatever you have. Get help where necessary. Whatever is not working, fail forward, fail fast, optimize, and keep growing. Okay, so the last bit is with trading. When the last bit is with trading, rather a finality in trading. What do I mean a finality in trading? So sometimes you can enter a business, you can enter a career, you can start a career, and what happens is sometimes things don't work out. You fail, you try, you fail, you try, you fail, you try. But be wise enough to know there's a difference between patience and wasting time. So if trading doesn't actually work for you, you've tried this mentor, you've tried this system, you've tried to be patient with the system, even with the market conditions, don't waste your time and resources in that in the industry. Rather try looking for a plan B that will actually work for you over time, because sometimes you'll just find maybe it's your psychology that is not really much in sync to trading. You'll find maybe your personality is not really much in sync with trading, so it has nothing to do with the market. It's all about how you decipher information from the market and how you execute it. So you'll find you're executing wrongly, and there's some form of rigidity in you to be flexible around the dynamics of the market. And this one, you can't put it on yourself. Some things are hard to change, and if it comes out clear, it's hard to change. Know when to exit. Don't stay in the industry, waste your years there. Look for another better alternative. There are many ways to make money. Don't waste your time in trading, because over time it will deplete your resources, it will bring a bad taste to your mouth, and you'll start sharing that bad light with everyone around you and everyone that comes to you for trading advice. You'll just be very quick to tell them that thing doesn't work, trading doesn't work. Never dare to do that. Personally, I've encountered people who have had very tricky situations with trading, but it actually never worked for them. And I've interacted with people who are really living off trading. So it's for you to identify whether it's working for you or not working for you. So remember to differentiate wasting time and patience. And with this, I believe I've been able to demystify some of the critical things that come around with trading. Bye bye, and see you on the next episode in Value Galactica, where value comes first. Thank you.